Welcome to the headline economy that we have here in the United States and quite frankly across the globe. And this week will be no different. Hey, it's Larry here with Monday Rate Update. And Iran and what is going on in Iran will drive the markets this week. And that is largely because there is not a lot of economic news coming out. We'll get into that in a second. But let's talk about what is driving interest rates up and down, this very volatile time that we have had in the last really 47 or almost 50 days now. So we have been in a conflict with Iran for about 50 days. And there's a lot of talk right now about, 60 days, after 60 days, according to the War Powers Resolution Act, the president has to go to Congress for authorization to continue to conduct the war. Well, the question now is, when really does those 60 days begin? Is it when hostilities start? Is it when we bring forces into action? Doesn't mean necessarily airstrikes is warfare. And what happens if Congress says no? Now, realistically, I don't have much faith in Congress to do anything, much less tell the president he can't go to war, continue this war with Iran. If anything, they're just going to basically sit on their hands and do nothing like they have done for much of the last 8 to 16 years. Quite frankly, we should go to war on Congress based on their inability to govern and lead. But I digress. So when does 60 days to begin? And even if Congress were to deny funding, there is still a 30-day withdrawal period. So right now, Iran, they're a little frisky. And if we expect Iran to do everything we want, I don't think that's realistic either. So somewhere the negotiations are going to have to meet in the middle ground. But I will tell you this, it will not be a victory for the United States if the current Iranian regime stays in power. Right now, they are a largely defeated military, but they can cause pain. You're not seeing too many attacks on foreign nations within the Gulf, but they are shutting down the transit through the Strait of Hormuz. But how are they doing that? They got small boats because they don't have a navy, using small arms fire. If I was the president, there's a couple different things, and they're probably doing them already. Obviously, we've heard about the Apaches patrolling, which is pretty normal. Every time we've had military ships go through the strait, we have air power in front and a rear of the fighting force going in and out of the Gulf. Every time they fire, they get obliterated. Every time they fire on shipping, we take out a power plant. All right, we make them feel the pain of not abiding by the ceasefire. So that's kind of what I would do. And I really stayed on this a long time, but it's important to note that headlines are going to drive mortgage rates this week. It's happened every day. Every day we've seen mortgage rates go up or down based on what we see in the headlines. Right or wrong, true or false headlines, they are driving the market. And I'll leave it on this. If Iran thinks that they have leverage, all we have to do is wait 10 more days because Congress is not going to authorize this. I think they are badly mistaken because guess what? I would not bet against our president and the administration and our military to effect enough pain to cause change in the regime. And if Iran is hanging by this hope that 10 days Congress is going to basically tell the president to pull forces out of the fighting, well, you know what? They're sadly mistaken. Now let's get into the economic news this week that will not really impact the mortgage rate too much, but still super important to know what's going on. On Monday, we have a China rate decision. So China's Fed equivalent is going to make a decision on whether they raise their short-term rates. They make that decision on Monday. On Tuesday, we have the ADP weekly preliminary estimate on jobs. We have a retail sales report. That one will actually have some effect. That will have some impact because, hey, are people spending more money? Are they putting more money on credit? We will see that in this report. We get a pending home sales report that comes out. On Wednesday, we have a 20-year bond auction. Thursday, we have the typical initial and continuing jobless claims. We also have the new home sales report. And then Friday, we have the University of Michigan Consumer Sentiment Index, which always has a small impact on mortgage rates for that day, but not a lot of news economically. Let's take a look at rates as we start the week. Conventional rates right now between 6.29 and 6.25 roughly and 6.5%. That's about where we're at conventional. And then 30-year fixed rate VA, we're just under 5.9 at 5.89. Lenders are going to be somewhere, plus or minus 10 points on that. But that's about where we're at right now. Pretty steady despite this war going on. Rates are going to be impacted daily by the headlines that we wake up to in the morning. Sometimes it's what the president says, sometimes it's what we see in Iran. Certainly oil prices are going to impact interest rates this week. If oil prices spike, which is usually based on headlines, then we'll see interest rates go up. So probably expect that interest rates will stay largely where we're at unless we get a breakthrough in negotiations between the U.S. and Iran and Islamabad, which are going to be happening over the course of the next couple days. It's about all I have for you this week. You have a great week. Stay positive and know that you control what you control. The biggest thing you control is your attitude and how you go about every single day. Let's have a great week. Aloha.